Daniel, Jebaleko.
Jebaleko Lynette. Jebaleko Sebo.
Okay.
Yeah.
Good morning and welcome. I'll just allow you to quickly give us what's the latest in the world of business as we're running out of time, you know.
Thank you very much. So on any given day lately, Zimbabweans have to deal with a wide range of economic issues, including volatile prices, shortage of basic commodities like rice and cooking oil, fuel queues that stretch for kilometers, scarcity of the US dollar, in addition to the humiliation of businesses refusing to accept the country's own currency, the bond note. Now, at 9 p.m. last Saturday, as many were preparing to call it a day, President Emmerson Mnangagwa said one more thing. He announced that petrol prices will be raised from $1.24 a litre to $3.3, while diesel will be raised from $1.36 a litre to $3.11. Now, the president explained that the prices had to be more than double to tackle a shortfall caused by increased demand for rampant illegal trading. The reactions were fast and furious. Citizens, activists and opposition political parties blasted the government for being insensitive to the plight of the common man and woman. The Zimbabwe Congress of Trade Unions called for a 3-day stay away and shutdown strike that has paralyzed banks, schools, businesses and the stock market in the capital Harare and the second city of Bulawayo. The country's labor minister, Sekai Nzenza, announced on Monday that public workers will be given a cost of living allowance of between 5% and 23% of their monthly salary from January to March, but you get the sense that this intervention came too little, too late. The president himself flew out of the country on Sunday for a 5-nation tour of Eastern Europe that will end at the World Economic Forum in Davos, Switzerland. Now, to help us wade through the anger, missteps and paralysis that has gripped Zimbabwe since the disputed presidential election last year, or if you like, you could go as far back as 2008. We talked to Kudzanai Sharara, a financial journalist in Harare. Welcome to the show, Kudzanai. We'll go right into it. What do you think should be done to resolve the ongoing fuel crisis, considering that the price hike has backfired?
I think what we need now is some kind of a social contract where government, labor, and employers sit down and deliberate on issues. For example, if they've done this with the fuel and say, look, guys, this is what we want to do as government, what do you think? And then business as well as labor will point out probably and try and fine-tune the laws.
Now, is a new currency, as announced by the finance minister last week, feasible and necessary at this time?
Mostly, it's not about the currency that we use. We can take the strongest currency in the world. We can take the Japanese yen, which is seen by many as a safe haven. You can take the US dollar. But it will still collapse as long as we do not have the proper fundamentals on the ground. We have got a huge budget deficit, which the minister is working on through these austerity measures. We have got a huge trade deficit, which also needs to be looked at. And so we have got so many challenges that we have, and fundamentals that we really need to sort out first before we introduce our own currency.
Thank you very much for your insights and time, Kudzanai. And if you are watching this show and you're in Zimbabwe, please feel free to head to our social media pages and tell us what you think should be done by Mnangagwa's government. Otherwise, I will see you online.
Thank you very much, Daniel, for that.